because of the higher standard deduction. But if you are still itemizing, this allows you to count the property taxes and your mortgage interest both as an itemized deduction, as well as count it toward your housing allowance. That's a really nice benefit.
Great. And I'm looking at a screen right now, so I'm not seeing the slide. The question was, Mr. Graham, what could you define what housing allowance means? And obviously you have it there on the screen now that I'm seeing. Furnishings and decor, so that means if they purchase furniture for the house, they can.
Correct.
Do they have to itemize, or I can't think of the term, but do it over like 3 years?
No, you don't have to amortize it or depreciate it or anything like that. You can just, now there are some limits we'll talk about in just a minute. So you could push yourself over that limit if you decided to refurnish the entire home in 1 year. But just for routine furnishings, and if you buy some new pictures for the house, a new chair, all of that can count towards it for that year.
Okay, all righty. I think that's it on those questions. So let's go to the next slide. How do you take advantage of this?
And this is where the in advance comes into play. This is what, as a minister, you will need to sit down and say, okay, I'm like right now, this is a perfect time to be thinking about this. You're at the beginning of the year, you're in January, you're looking out for the rest of 2020 and say, okay, what am I going to spend on housing this year? What are my average utilities? What are my property taxes, my insurance, my mortgage and interest payments? Do I anticipate buying some new furniture this year? Are we going to be doing some major maintenance this year on the home? And come up with a total that you expect to be your housing for the year. The church will then can use the information that you provide to them to say, oh, all right, this is the total for the year. So let's divide that by 12. We're going to designate X dollars per month as part of your house as housing instead of salary. And they have to document that in the church records. Now, if you want to go on to the next slide, I think this might help a little bit as an example.
Okay, I've got a question before we go to that. Can you explain fair rental value?
Yeah, that's if you can hold on for just a minute till we get to another slide. I'm going to walk through that. I think it'll make a little more sense at that point.
All right.
But just
I'm kind of looking at questions right now that are being asked.
Okay. So this is an example that you see on the screen now. Let's just say your total pay historically, and you hadn't been doing a housing allowance, was $55,000. But then you sit down and you say, okay, I really think I'm going to spend $25,000 on housing this year. That means that if the church goes in and has a resolution, and I'm going to give you a sample one of those in just a minute, it says we designate $25,000, or you can do it on a monthly basis, as housing for this point forward. You can't do it retroactive. It has to be going forward. That means when you get to the end of the year, only $30,000 of that 55 is actually going to show up as salary. Now, I know a lot of the smaller churches may not have a set salary. They may be receiving a percentage of tithes. You can still set the housing in advance, and whatever extra above that gets paid then will be the salary amount that's left over. So you can designate the housing first and sort of fill up that bucket, so to speak, and then anything over that you're compensated becomes salary. And
if they're not compensated, if the local church does not have that much tithes come in, we're okay too.
Right. If it's all housing, that's perfectly acceptable. There's no limit. You could theoretically have 100% as housing.
Right. And I have a question here, and let me answer this first. Yes, you will be able to obtain a copy of the slides. We also are going to make available to you, if you will send me your email address, and I'll tell you how to do that toward the end of the broadcast. But we'll have available to you a printout from the ECFA, or a little booklet the ECFA puts out every year that explains these in great detail, that are easy to understand. It's not like the big old tax books. I've got a question here. It says, if you don't receive housing allowance, can you still claim these deductions? And I think what I hear you saying is, if they will designate it, they should be receiving a housing allowance.
Yes. Now, if you didn't designate one for 2019, you can't claim it for 2019. We're past that point, but they can designate it for 2020 going forward. And you can count all that as housing. If you don't have a housing allowance set by the church, the only thing that you're left to do is to itemize property taxes and mortgage and in your interest payments, just like you would have otherwise if you are still itemizing on your tax return.
Right. And for those who pastor smaller, or I say smaller, but let's say churches that don't pay the base pay,
Right.
You could realistically probably have your entire salary from the church designated as a housing allowance, depending on how much your church pays. For some of those that don't pay a lot, you definitely need to designate that, because then your salary from the church would not be taxable income. But she'll explain more about that in a moment.
Yeah, that's actually fairly, the smaller churches, we see that quite a bit. If they'll take the time to designate it, then the whole thing can be housing.
Right. And question follow up on that is, this should be addressed every year, every fiscal year at the beginning of the year. Is that correct?
That is correct, yes. Generally, I encourage people in their the church resolution to say that it's ongoing, just in case you're late getting a meeting, or you don't want to end up with like 1 month when it wasn't covered. That way you bridge the gap a little bit, but the church should be looking at that on an annual basis.
Yeah, and on that question, they asked, should it be addressed every fiscal year or every church year? And the international office and the regional office here in the Magnolia region has switched to our fiscal year now matches the calendar year. You are allowed to do that as a local church, but if you don't do that, you still need to do this documentation at the beginning of the year, because your taxes are paid on calendar year, not on your church fiscal year. Is that correct?
That's correct.
Okay. Are we ready for your next slide?
Yes.
All right.
I think so. This is an example of one of the resolutions. There's 2 or 3 others that are included in the guide that Brother Stone is going to provide to you. But this is one that we've used at some churches I was at, where you just basically list the church name. This needs to be done in frequently they'll do it in a business meeting, just approve it. Or if you have a finance committee, the finance committee will approve it. So you just designate which body is making this approval, and they authorize the housing allowance. And if you have, this particular one will allow for multiple ministers. So if you have more than one on staff, that you're giving a housing allowance to. And then you just state if you're going to pay this to them on a monthly or weekly or biweekly basis, whatever your payroll situation is. And you'll see there, it says it's valid for the remainder of the current year and all years afterwards unless changed. That's just kind of, again, it gives you a little bit of a cushion in case you always do this in December and something comes up and they didn't get to do it until February. You didn't lose January's allowance. It can kind of carry forward until they make a new one. It's just always a forward look, and you can't change what happened in the past.
Right. And that goes along with a question that has come up is the individual states that they understand this must be adopted before the end of January each year. But that's not necessarily true, but it can only be valid for after it's adopted.
Correct. That is correct.
Yeah. So if you
and I mean, you also have the option, if you made it in January and you get to June and you realize it was just not right, it needed to be a different amount, the church can always designate additional for the remainder of the year. Again, it just always has to be on a forward-looking basis. Right.
So they do not have to have it done by the end of January, but they could not use any January expenses.
Correct.
Okay. Another question that's come up on this is, if a minister purchases a home with cash, can they amortize the expense over time?
Unfortunately, no. That is one of the downfalls. This is the only place as a financial advisor, sometimes I see it makes sense. You're saying, okay, don't pay your mortgage off quite as fast.
Right.
Because depending on your tax bracket and how the math works, you might actually be better off paying that over time, because you're going to be capped. And someone asked about the fair market value earlier. If you bought the entire house for cash this year, the most you can designate as housing is what the fair rental value would be. So if you bought a $150,000 house, you're not going to get a $150,000 housing exclusion. You'll just get whatever that cap is. And I've got a couple examples of that on some following slides.
Okay. All righty. It's great information and good questions coming in as well.
Very good questions. Okay, this is where I think someone was alluding to earlier. It's great that you designate the housing allowance, but when it comes to tax time, you've actually got to look at 3 different numbers. The first is what you actually spent. You start at the beginning of the year projecting what you thought it would be, but then when it gets to the tax time, you have to look at what you actually spent. So go in, pull all your records, see what your actual utilities were, what you actually spent on maintenance, what you actually bought for the home, and come up with a total there. So that's your first number. The second number is what's called fair market rental value of the home. And there are a lot of ways to calculate this. You just have to be sure that you've come up with something that's supportable for tax purposes. The first is going to be the fair rental of the home itself. I found that actually with sites like Zillow and some of the other real estate sites out there, most of those give an approximation of what the rental of your home will be. That's a good starting point. You could talk to a real estate agent and get a better idea of what it should be if you feel like what's online is not accurate. And that'll usually give you a monthly amount that you'll multiply by 12 to get an annual for that rental of the home itself. But then you also get to factor in the fair rental of the furniture and appliances. I've actually gone in and pulled up some of those rental places to see what they would charge for that, or looked at some comparable homes in the area that happen to be furnished. That's a little bit harder to find. But if you can find a furnished home in your area that's about the same size as yours, you can use whatever it rents for as an approximation of the first 2 together. And then you'll add to that your actual utilities. So those 3 things combined are what makes up that fair market rental value of the home that they were asking about earlier. So that's going to be your second number. And then you've got what the church actually designated as housing allowance is the third number. And what you do is you compare all 3 of those, and whichever one is smallest is what you get to claim as housing allowance on your tax return. And I've got a couple examples if we can slip to the next slide real quick. So for example, if you see on this slide, the actual housing expenses were $18,000. Went in and did the calculations and determined that the fair rental value was 19, but what the church designated was only 17. So the smallest of those 3 numbers is what the church designated. So that is what you can exclude on the tax return. The fact that you actually spent $1,000 more, that's just lost. You can't go back and count that for tax purposes because it wasn't designated in advance. Now the reverse of that is true if you go to the next example. In this situation, the church designated 20,000, but you only spent 18. So that means you can only claim 18. So what happens is that extra 2,000 that's not on your W-2 right away, when you prepare your tax return, you have to come in and bring that back into income because you didn't use it all.
Okay.
Does that make sense? It's a little complex.
Yes. I just got in a chat asking, where did y'all go? Is everybody else still seeing us, or just one person loses? I'm still hearing you and seeing you, Sherri.
Okay.
So I think it's probably the individual. Anybody else still seeing us, hearing us? Yeah, everything's fine. Thank you, Blake. All right, we're good. Thank you.
Okay.
All righty. I think that individual just lost his connection. All right, Sherri, we're on the next slide now.
Okay, so with that in mind, there's a couple of things to remember as you're trying to figure out how much to designate each year. Obviously, first, the pastor needs to just figure out what their expenses are going to be. You don't want to just pull a number out of the air. It's best to come up with something that approximates what you feel like you'll actually spend for the year. And it's better to set it too high than it is to set it too low. Because if you, like you saw in the first example, if you set it too low, the opportunity to claim that is gone. You can't go back and pull in that extra $1,000 that you spent. However, if you set it higher, like at the 20,000, and you don't use it all, that sort of takes care of itself on the tax return. It just gets pulled back in as income because you didn't use it. So you would rather overstate the allowance than have it be too small, because you can't go back and adjust it after the fact.
Right. Okay. All right, when the church provides a parsonage.
And so if you happen to live in a church parsonage, it works very similar, except that obviously you're not going to add up what you pay. The fair value of the parsonage, by the fact that it is being provided to you, you already have a housing allowance that you need to be reporting on the tax return in order to calculate the Social Security taxes. But you can designate a separate cash housing allowance that you can use for all those other types of expenses, like the utilities if the church does not pay for those, for furniture, maintenance, lawn care, anything that the church is not paying for directly. They can designate part of your salary as housing allowance in addition to the parsonage itself. And those two items together are considered the housing allowance for your tax return. Now remember, all of this is pulled aside so that you don't pay income taxes on it, but you are still responsible for paying the Social Security taxes on it.
Right, and
including the parsonage.
Let's reiterate that again, that if a pastor lives in the parsonage, then and the parsonage is provided for him, that is to be entered on a separate line on a W-2, and unless they have waived their Social Security benefit
right
earlier, then they have to pay FICA and Medicare taxes on that.
Correct, on whatever the fair rental value of that parsonage is.
And if the pastor does not live in the parsonage, obviously, then he doesn't.
Then that doesn't apply, correct?
Right. And if has his own home or is renting a home, they need to be designating a housing allowance.
Exactly. That is exactly correct.
Okay. All right. I'm kind of looking at some of the questions there and answering that. All right. We're going to move on now and talk about expense reimbursement. But before we do, if you have any questions about housing, please ask those now. We can come back later, but now is a good time to ask those. Let's let Sherri catch her breath a moment. And if you have any questions, feel free to do so. Let me also say, I'm going to type in the chat my email address. And if you will email me, shoot me an email, I will send you a copy of the EFCA. Sherri, what does that stand for?
Evangelical Council for Financial Accountability.
Right. It's kind of the hallmark organization that holds Christian or helps Christian organizations make sure they are doing things properly. And they do have a booklet that has come out, just came out for 2020 on understanding ministerial and also for churches reporting. You can get that yourself if you want to go to their website. You're going to have to answer a few questions and they'll send you an email. You can download it. But if you will shoot me an email, I will be happy to forward that to you in the next day or two on a PDF file. And so you can have that on your file as well. But like I say, you can get that yourself. All right, are we ready to move on then to the expense compensation?
Okay. This is another one of those things that is very important to do in advance. And this has really been a hot topic with the IRS, even at some conferences I've been to over the last few years that weren't church related, so to speak. They were for just normal nonprofit, some continuing education for my CPA license. This comes up frequently about how important it is that you have to have what's called an accountable plan. If there's not an accountable plan, just the fact that the church calls it an expense payment doesn't make it a reimbursement. It will still be taxable income and included as salary. So, and what makes this even more important with recent tax law changes is that if it was not an accountable plan and it was considered taxable income, under the old tax law, you still had the opportunity to claim some of those expenses as unreimbursed employee expenses. That whole section was taken away with the tax law changes in 2018. So now the only way to actually effectively get reimbursed for expenses and not have it count as income is to use this accountable plan. And we'll walk through what you have to do to qualify as an accountable plan.
Okay. And again, if you have any questions on this, feel free to either in the chat area or on the Q&A box, just shoot them to me and when Sherri takes a little breath, I'll butt in and ask the question. All right, so we're going to talk about the expense plans and the accountable plan.
Yeah. So again, this may be a term you've heard like dual status, but I want to explain to you what it means. For something to be an accountable plan, it means that the documentation for the expenses are actually submitted to the church for reimbursement. In other words, they are accounted for to the church. You didn't just tell them that you had it, they actually see all the documentation, just like you would if you worked for any other employer and you traveled, you had mileage, you had conference expenses, you would turn those in for reimbursement and you would give them all your receipts and the documentation of how far you drove. The same thing applies for getting reimbursed for expenses for the church. And there's a couple of ways that you can do it. One, which is probably the most common, is that the church will decide as a preset amount. They've kind of learned what the average expenses run for their ministers. And they'll say, okay, well, $200 a month, for example, is what we're going to give. We've kind of got allotted for expenses. And they'll give that to you on a regular basis. But in order for it to be accountable, on a monthly basis, you really need to be turning in all your receipts for what you spent that $200 on the prior month. The IRS requires that you get those documentation into the church within 60 days. And if they paid you more than you actually spent, you're supposed to return the excess within 120 days. So that's kind of your parameters for turning in the documentation to the church. It is easier for the church if they're just cutting the check for the same amount every time and then accounting for it later. But they can pay the minister as the items are submitted. You could just turn in an expense reimbursement check every month. Here's what, it's $50 this month, it's $150 the next month. That's still accountable if you're turning in those receipts to the church before they, so that they have in their records what they're paying you for.
Right. And is this this is the same as the housing allowance where this affects income tax, but not FICA and Medicare?
No, actually, this is better than the housing in that regard. You still don't owe, this is an expense reimbursement. So there's no tax consequence at all. No Social Security, no income tax.
Okay. So that's pretty important that we get this established for our pastors.
It really is, because, the reality is we all know that all of the pastors are incurring expenses that they're paying out of their pocket. And we don't want them getting a salary and then turn around and spending the salary for expenses. We want them reimbursed for expenses, and then their salary really be a salary over and above that.
Okay. So
and that's what this process will accomplish for them.
So this really creates what they're getting from the church, and that for that arena, tax-free. There is no tax.
Yes.
Okay. All righty. Let's move on.
We can go on to the next slide. Kind of get some terminology correct, and I'm guilty of this as well. We tend to refer to housing allowance and then expense allowance as well, but allowance tends to imply that you're just sort of giving it freely without having to be accountable for it. So it's really, I think, gets clearer in everybody's mind if we can sort of get ourselves in the habit of calling it an expense reimbursement as opposed to an expense allowance. Now, just like the housing allowance, it should be documented in the church records with a resolution that says we're going to pay, like I said, for the preset payment amounts, if it's, $100 a month or $200 a month, that's really going to depend on what the pastor is doing. How much are they driving on a regular basis? Where is the church located? Is it a long way to the closest hospital where they're doing visitation? Or their conferences that you expect them to attend, just what's going on there. So that's up to the church to determine what that amount is going to be. And you need to document that our policy is they'll turn in their expenses, monthly, no later than 60 days, and that if there's extra that we've given them, they'll return it within 120 days. Now, if you're just paying it as incurred, that also needs to be documented in the church records that says we will reimburse expenses as they are incurred. And sometimes you may want to put a cap on that. You can say up to X dollars. You can state that as well. But again, it's really important to document what your policy is going to be in the church records. It's very easy to do this at the same time you're doing the housing allowance. You can just have all those resolutions in the church records at the same time.
Is this like a housing allowance as well, that it's going forward, it cannot be retroactive?
Yes, that's correct. I'm talking about.
Got a question that's come in. What if in some of our churches that struggle financially, the pastor is actually paying the church's utility bill as well.
Yes. And here's how I would approach that. If you're paying, there's certain bills that aren't necessarily what I would call ministry expenses. There's the church's bills. And I would distinguish between those. If you've paid the church's bills, I would submit those as reimbursement from the church, and basically have them repay you for those things first before you ever started getting paid your housing allowance or expense allowance or salary.
Right.
Because essentially you've paid that bill for the church.
Right. And with that,
and I would again distinguish what I call a direct reimbursement versus an expense reimbursement. For example, somebody from the church needed to go pick up the candy for the Easter egg hunt. And out of convenience, it was the pastor ended up doing it. So he went and she went and bought all the candy. That should not come out of your expense allowance. That was something you picked up, just like any other member of the church. If they had picked that up for the church, they would just turn that in directly for reimbursement. So I would keep those separate. The types of things that are part of your ongoing expense reimbursement for the pastor will be your mileage, just going to meetings, going to visitation, going to district functions, anything that requires you to drive. You want to keep track of your mileage. If there's certain hospitality things that you're doing with members or other ministers or ministries within your area to build relationship, if you're taking someone to lunch, those types of things, your books that you may do, some conferences you may go to, those are your expense. That falls under expense reimbursement, which is very different than one-off specific things that you go purchase as a convenience for the church and then get reimbursed for.
Okay.
I would account for those separately.
Okay. And you may have this on a slide. I don't remember everything, but I know one of our pastors here in the region, Brother Ryan, myself, use an app called Mile IQ.
Yeah, I actually have that on one of the slides. That's a great app.
Yeah. Because you do have to document your mileage. You just can't guess at it. You do have to document it. And I know some keep a little notepad that they write everything down in. For me, Mile IQ is much easier. But
yeah, actually, the two I suggested, I think it may even be on the next slide. Well, no, back up one more.
There we go.
Here it is. Yeah, you must maintain a log of your travel for the mileage. And so like when you turn it into the church, I know the state has a form that they use for, like my husband working out of the state office. It's a set form, and you say, okay, it was this date, this is where I went, and this is how many miles it was. And he has a calendar in his car that he writes down the mileage off his car. So he puts beginning mileage, ending mileage, and here's the end. He also uses Mile IQ along with that, because it'll calculate for you your stop and start, and also help you double check against what you wrote down in the book in case you forgot to write something down. So the combination of those really is a good practice to get into to keep track of your mileage. Then I listed a few of the other things that are part of the reimbursable, and you'll see any supplies, they're only those that are not directly reimbursed otherwise. That was what I was talking about for things that are really the church expenses as opposed to your ministerial expenses.
Okay, we got a couple of questions here, and then there's another suggestion. Can you approach expense reimbursement by salary reduction by the amount of the incurred expense?
I'm not sure I understand. Can you ask that again?
Can you approach expense reimbursement by salary reduction? And that really, I think what they're asking is, yes, if I'm understanding the question, can you approach it by the amount of the incurred expense? And that's why you would have an expense reimbursement account or fund. Is that correct?
Yeah, I guess what I would caution, the one thing you've got to be careful not to do is get to the end of the year and figure out what your expenses were and say, okay, I'm going to reduce my salary by that. Right. That is not allowed. You have to, now the church in its mind may think about, when it's setting the salary, it may literally have to think about, what can I afford to reimburse as expenses? What can I afford to do as housing? And then what's left is what we're going to set your salary at. But it doesn't come out as a deduction on your paycheck. You're still going to get a normal paycheck. It's preferable for the expense check to be separate. from the paycheck, because the paycheck has to go through the payroll system. So whatever has been designated as the expense is really better if it's coming out of a separate account or in a separate check.
Yeah,
It's just a
and
little bit cleaner for the accounting side
I
of things.
think what they're asking is that very thing. They're probably, and Brother Billy, you might can clarify with another comment there, but I think what they're saying is if you're doing the reimbursement, you turn in the receipt to be reimbursed. And the church is really not reimbursing from their funds. They're just, can they say?
Well, no, tell you, it really it is from the church's funds.
Right.
Yes, they are reimbursing you out of their funds because that is separate from. Now the housing is designated as a part of your salary can be designated as housing.
Right.
We have to be very careful because of the way the IRS thinks. Expense is a different bucket.
Right.
Altogether. Now, from a budgeting standpoint, the church is all the church's money. They're using some of it for compensation and some of it for expense reimbursement, if that makes sense.
Right. And I think what he's asking is if, and I may be wrong, so Brother Billy, feel free to chime in there on the chat. And then we've got another comment or question. If, let's say they bought a book for ministerial purposes, and they turned that receipt in and was going to have them reimbursed, they would deduct that amount from what they say is the salary. Is that correct?
It's already out of the salary. It never becomes part of the salary.
Right. That's what I mean. Yes.
Yeah, it's because it's set in advance, and it really depends on which way they're doing it. If they're doing it on the preset amount, they're getting a check and they just have to account for how they spent it. It's separate from their salary to begin with. And if they didn't spend it all, they have to give it back.
Right.
If they bought a book and they're not getting a set amount every month, that's like anything else. You just turn it in, you get reimbursed. It never touches your salary at all.
Okay.
And I do understand where you're coming from, but it keeps it cleaner if we, as I said earlier, if we can begin to think of those as two separate buckets.
Right.
Compensation, which is salary and housing on one side, and then expenses are just something completely different, just like if you worked for any other employer.
Right.
What you get reimbursed for expenses never flows through your paycheck at all.
Right. And I think the question probably is in a church that does not have base pay. And,
okay, yeah.
And so
yeah, that would never be considered any part of your pay if you're getting reimbursed for something. It's completely separate.
Right. But with the church then, from what they have paid you, let's say it was $2,000 this month that came in that was the pastor's tithes portion. And they turned in an amount of, they turned in receipts for $130, let's say. Okay. Would the treasurer then report that month's income as if they did not do, if they were getting reimbursed, let's put it that way, mm-hmm. Would she need to deduct that 130 from the 2,000?
It gets a little,
I think what you're saying is it just really needs to be better if they designated an amount in front.
It would be better if they designated an amount up front and that they're paying them out of that, because where you get into a little bit of a, what is it, percent of tithes, it's your salary. You can't really reduce that amount. It's almost better if you can set the salary, even if it's a target of an X dollars a month. If you don't meet the target because there's no cash, you just don't get it.
Right.
As opposed to saying it's got to be this percentage of tithes, which means I have to pay you this and I don't have anything left to fund the expenses.
So if let's just say their tithes were running $2,000 a month, the pastor's portion, if they set their expense portion at $2,500, just as theoretical, if they don't get $2,500 in, that's okay.
Right.
They turned in receipts for $2,000, at least $2,000 or $2,500.
Right.
Okay. 2 questions here. One, meals can be 100% when it's for ministerial purposes.
Well, because you're getting reimbursed. It's
right.
Not 100% if you were trying to claim it on your tax return. But if you're getting reimbursed, you can be reimbursed at 100%.
Yeah, if you've set that up and for that purpose. And has this changed? I know a few years ago, I mean, it's always better to have receipts, but there was an amount they would allow that on a meals.
Yeah, I mean, there's what they call a de minimis rule that changes a little bit. Usually, if it's less than 25, you could probably get away with it.
Yeah.
It is preferable to have receipts for everything.
Right.
So I would just encourage you, if, unless it's something that just you spilled your drink on and you can't recover it.
And again, on that, I use an app.
$25, it's not going to be a major ordeal.
Yeah, again, I use an app called Fine Reader that just in the restaurant, I take a picture of the receipt and it
Oh, there you go.
sends it to my computer.
That's perfect.
So I have it already.
What was the name of that?
Fine Reader.
Fine Reader, okay.
Mm-hmm. And sends a PDF straight to my computer, and that way I already have it. And the IRS, it says the IRS will accept those receipts as well.
They will. They are fine with scanned receipts, which actually they last longer than the originals. In many cases, the quality stays better.
So whenever I'm doing a meal, I just take a picture while I'm at the table before I get up and have it there. Brother Ryan Napolo, I'm sorry, that is, I'm going to type that in here. Somebody asked how you say it. Brother Ryan is really good about on these apps. And Brother Ryan, the chat has moved up, and I don't know there we go. I can get back to you or not. He's really good on these type of things. And he says, if you will get a tech soup, it's moving on me. Brother Ryan, if you could text that again, and also click, Brother Ryan, if you'll click it from all panelists to all panelists and all attendees on the to box, that way everyone will see that. And it's a organization that if you'll join them, a lot of these apps you do have to pay for them, but you get them cheaper by doing them with these organizations. So Brother Ryan, if you wouldn't mind to do that, I'd appreciate it. And I just sent, that is called Fine Reader. Question, so there it is. If you also get a TechSoup account for your church, you can get MileIQ for $12 a year, and he's got the link there for you.
Okay, that's awesome.
There's a question as, should all tithes go through expense? And I think it probably depends on the size of the church and how much the pastor's salary is. Is that?
Yeah, it's the smaller the church, when you're dealing with fluctuating income, I would start with, out of whatever we have come in, we're going to set an expense allowance. It's a reasonable amount that you think the pastor would use every month. Your next thing to designate is housing. And then whatever is left above that is available for the minister, then that can be salary.
Yeah. And you want to set an expense account first because that deals with FICA and Medicare as well.
Right. That essentially just allows the pastor to put back in his pocket what he's already spent on ministry. It's to keep him whole.
Right.
Really. And it's appropriate that it's not taxed because it's not income.
Right. So and again, I don't know who asked that question because it's only coming up as your phone name and I can't see your name. It probably would depend on the size of your church and how much expenses the pastor. If you're a base pay church, if you can come up with whatever the base pay is, you could probably do that. But just remember, what you don't turn in, you still have to count that as income. Is that right, Sherri?
Yes. If you don't turn in the expenses, then that's income to you.
Okay.
Even if it's preset,
right.
You have to. Well, actually, let me back up because I don't want to create some confusion there. If you've gotten a preset amount on a monthly basis and you don't have enough expenses to support that, you actually have to give it back to the church. They can't bonus it to you or say it's extra income. That's actually specifically disallowed in the regulations. You actually have to turn it back into the church.
Okay. All right, let's see what our next slide. Let me move over to that.
Yeah, these next couple of sections are really about how you report all this at the end of the year, both from the minister's side and the church's side. But before we get there, were there any more questions on the expense allowance or the housing allowance itself? We have a few minutes.
I'm not seeing any others. No.
Okay, well, we'll go ahead and move into the reporting requirements then, because this can also be confusing. So as a minister, there's several places that you're going to be putting information. The first is going to be the amount that you get as a W-2, which you should be getting this week if you don't have it already from your church. And whatever is showing up as salary on the W-2, that goes in on your Form 1040, just like salary from anywhere else that you would be working. Now, most ministers also get ministerial income from places other than their local church, whether it's for funerals, weddings. You might get other honorariums for speaking at special events. Those are considered just self-employment income because it doesn't run through your local church. And so that is going to go on Schedule C as self-employed income. Now, if you did happen to go to the same place several times, or you spoke at a large conference, if you happen to get more than $600 from one place, they should be sending you a Form 1099. And the amount still goes on Schedule C, but you should expect a 1099 from that entity that paid you that amount. Now, a note on that, when you do Schedule C, the expenses that you put on Schedule C should only be those expenses related to the wedding or the funeral or wherever you were speaking at. You're not allowed to take other church expenses that you had over and above what you got reimbursed for and suddenly put them on this Schedule C because it's ministry as well. You have to keep those separate. And this is the other part I want to note there that comes as a surprise sometimes is if you have the housing allowance, there's a formula in the tax return that basically will disallow a certain percentage of your expenses on Schedule C based on the proportion that your housing allowance bears to total compensation. So let's just say you're one of those ministers who 100% of your salary from the church was housing allowance. That's essentially going to wipe out almost all of your expenses on Schedule C, that your mileage to the funeral or the wedding or whatever. So don't let that surprise you when you see that it happens. It's just the IRS's way of saying you got one benefit over here. We're not going to let you segregate these other ministry expenses from that. We're going to apply this housing allowance kind of across the board for that.
How accurate should our pastors be on keeping records of, say, if they've done 2 funerals during the year and somebody gave them $100 each? And obviously nobody's reporting that, but how accurate, how should they account for that? Because
they should account for it.
Well, yeah,
what I suggest is if you have some sort of personal finance software, whether you use QuickBooks or Quicken or Mint or anything like that, just when that goes into your accounting, your personal accounting system, just go ahead and tag that as ministry income or honorariums. And then at the end of the year, the correct answer is you're supposed to add all of that up and put it on that Schedule C.
Right.
I know Sister Couch, who used to be Director of Stewardship at the international offices, she convicted me one time speaking. She says, yes, I count all the gift cards that I get as well. It's like, oh, I never thought about that. But yes, you are supposed to keep track of that and include it on the Schedule C.
Okay.
And the last note on this page, as far as your reporting when you do your tax return, the Schedule SE is what is going to come back and calculate your Social Security tax. And that's going to be taxed on 3 things. It's going to take in your salary from the church that didn't have any Social Security taxes withheld. It's going to pick up your housing allowance, which was not taxed. And then any the net Schedule C income for ministry. Those 3 things get added together, and that is what determines how much Social Security tax that you're going to owe. And I think I have an example of that calculation there just to let you see how that works. So there's also several really good calculations in that guide from the ECFA. But here, for example, using that original example of a $55,000 package, if you had $30,000 in salary, $25,000 in housing allowance, and then you had $4,000 total from speaking and revivals and funerals and weddings to get you to the total of $59,000. That next line is just a little odd calculation on the form that adjusts a little bit there. Then you multiply that by what's called the SECA rate, which is the 15.3. So you're going to owe $8,336 in Social Security taxes, which always feels like a lot because now you're paying all of it instead of just half of it. the way you would if you're bivocational, working somewhere else. But the trade-off is all that housing allowance was not subject to income tax at all. You have to avoid that.
Right.
So that's just to give you a little sense of, where the numbers are coming from and where they might end up on your tax return.
And that's why it's really important to get that expense reimbursement set up.
Yes, because that shows up nowhere on here.
Right. Right. And again, you do not have to do that at the beginning of the year, but it only goes forward. I've heard many say you have to do that before January 1. That's not true, but you just can't count it until.
Right. Yeah, from the date it's approved from that point forward.
Right. And you would do that in a conference. Right.
Or if you've got a separate finance and stewardship committee that controls all of that, they can set that as well, just in the conference meeting. It doesn't have to be in front of the entire church.
Yes. Okay. Let's see.
Okay, now this flips to the other side, and I do actually, we have some wonderful people who volunteer to be our church clerks and treasurers, but sometimes this is not their primary vocation. They've not had a lot of experience in accounting, so a lot of this may be new to them. But the church is responsible for issuing the W-2 to the minister by January 31st each year, which means the church then sends a Form W-3 to the IRS. I've seen so many times where we get calls, in April, it's like, well, I'm in my accountant's office and they're trying to figure out what the church paid me. I was like, oh, that's really not how that was supposed to work.
Right.
So it's not, if that's not how you've done it in the past, I encourage you right now, tomorrow, go meet with your church clerk and treasurer and make sure that they get you a W-2, that's what you will then take to the to your tax preparer to get your tax return done. Now, what the W-2 is going to look like, the second bullet, it's going to report your salary on the main line where it says wages. It will not include the housing allowance. And the places where it typically puts federal and state withholding or Social Security tax wages, all of that will be blank. So a minister's W-2 does look a good bit different from the typical W-2 that you get because there's a lot less information on it, or at least completed on it. The housing allowance isn't technically required to be reported on the W-2, but it's highly recommended. It just keeps things much cleaner. But it's listed in a separate box, and it's very clearly denoted that it's housing allowance. Now, I will note, if your church is large enough that it has other staff that are not ministerial staff, or if, as we talked about earlier, the pastor elects to have some taxes withheld, then the church is also going to have some quarterly tax reporting requirements. For every quarter, they have to send basically a payroll tax report in. And if they've withheld any Social Security from, or really withheld any income taxes on the behalf of the pastor, or if they have staff that aren't ministry, if you have a custodial staff, or if you have a church secretary that gets paid a small stipend, the church is responsible for the Social Security taxes on those employees. And so they're required to include that in their quarterly tax reporting.
Right. Okay.
Now, these are just a few miscellaneous things I just wanted to point out that always come up when we're talking about pastors' compensation packages. I mentioned this earlier, but the 2018 tax law did change things pretty significantly. If you don't get directly reimbursed from the church for your expenses, there's nowhere to deduct them on your tax return anymore, because you can't apply them to Schedule C because it's related to your employer, and employee unreimbursed expenses don't exist anymore. They also eliminated the ability to reimburse moving costs. So if you happen to move and the church helps pay for your move, then that's taxable income. So that's a little quirk from the new tax laws that we've had. Now, all of this is set to sunset in 2025. So a few years from now, we may be having brand new discussions about everything. But just a few other things to point out. When health insurance gets a little complicated, the passage of the Affordable Care Act just really shook up the healthcare arena completely on many fronts. And one of the areas that it significantly impacted was the church's ability to reimburse pastors for health insurance premiums. At this stage, really the only way that it's allowed is if there's what they call a one-person plan, which means you only have one staff person and you're paying for their plan. And really, their plan has to be a plan. It can't be their share of their spouse's coverage. That throws some kinks into the calculations as well. So I won't say a lot about that. If you've got questions afterwards, I can send you some information, but just be very careful if that's something that you have been doing, because there's a lot of ways to get tripped up in that. Retirement plan contributions are another way to reduce your salary in terms of taxable income currently. And the church has a great 403B plan. I think that's next month's topic for the Zoom meeting, is to talk more about the retirement plan that's available. But to the extent that you have the resources available to put that aside, we highly encourage people to participate in that. As I said, it's a great plan. It's very important for pastors, just like everyone else, to plan for retirement. The next one, the reimbursement for half of Social Security taxes. I do know that some churches, because they know that their pastor is responsible for the entire burden of the Social Security taxes, they want to compensate them for what they would have been paying towards it if they were a normal employer. That's fine, but all that really is an increase in salary. If they just want to say, hey, this would have been your salary, but we're going to raise it to this to kind of offset that, there's no separate deduction or calculation for it. It's just extra income to you as a pastor. And the last thing there is, there are some pastors that have opted out of Social Security. It's not something generally recommended, because there's a lot of things you have to do right once you opt out of that. And there is only one chance to do that. It has to be done when you first start getting ministerial income. You're going to get one shot at it. You have to file all the right forms. And your reasoning, if you're being completely honest about it, you have to have a true conscientious objection to participating in the plan. It's not just, I don't want to pay it. That's not really the right reason to opt out. But for those who have opted out, I would just encourage you, that makes the retirement plan contributions and some other savings just that much more important. That you take what would have been going toward the Social Security and that you're putting it aside to save for things that Social Security would have provided for you later.
Right. All right, and there's our resource page of, we're gonna, if you will email that, if you will send me your email address, my email is duke.stone@magnoliacogop.com. I'll be happy to forward you a copy. I also have the church reporting made easy. It's a little thicker, a little more to it. And I'll be happy to provide those to you. You can get those yourself if you go to the ECFA website and you just register. I think you have to give them your email, and then they'll shoot you an email, and you're on their email list, but they don't bombard you too much. They just send you a few information. Is that our last slide?
It is.
Okay. I'm going to stop sharing then and come back and join you. Well, let me see if there's any other questions. If you have any questions you would like to ask Sherri before we're through tonight. Oh, there we go. Is the church required to issue a W-2?
Yes, yes, and yes. It's not optional.
Right. And to do that, you'll have to have your tax ID number. And if you don't have that, if you're in the Magnolia region, we have that number if you've gotten one, which you should have. And probably, Sherri, you may not be old enough to remember this, but back when I first started in the ministry, they gave us 1099s, and we filed everything on Schedule C.
Yeah. And I think that's where a lot of the confusion, I think, has come from, because there's people who've been doing returns that way for a long time, even tax preparers. And so they're just still used to getting all the information and sort of dividing it up between housing and expense and everything at the end of the day, and then dropping it in on Schedule C. But as I mentioned earlier, the way the rules have changed and the IRS is paying attention to this, even, court cases trying to fight the housing allowance as an option, it's certainly something that's getting a lot more attention. So it makes it that much more critical that we really are diligent in following the rules correctly.
And that is one reason why I suggest you go to the ECFA website and register for their emails. They'll send you an update on court cases that are going on. And one that has been being fought the last couple of years is the housing allowance. And they'll let you know if that changes, or if so far it has been supported by the court system. But should that change, you would know that from them. Any other questions? I see some great comments, wonderful information. Thank you, Brother Ryan. Very easy place for treasurers to file them online and submit only $450 per W-2 or 1099. is efiletaxforms.efile1.com. You actually can register. It takes about 5 minutes to do so with the IRS's site, Social Security site. And you can file W-2s online and print them for free, but they do not do 1099s there. Okay, maybe we need our bookkeepers training on setting up books to reflect these suggestions. Yeah, I would agree with that.
I will say in South Carolina, we did do a couple of sessions at some of our like regional equip conferences that Shirley Passmore from the state office, our state treasurer, came in and helped her with that. We did it just for the church clerks and treasurers to try to get them up to speed on things. It is a useful endeavor.
Yeah, I think it is. I think one of the struggles is sometimes, as Sherri said earlier, we have wonderful people who volunteer to do this job, and bookkeeping is not their field of expertise, and sometimes the terms can get a little bit overwhelming if that's not your cup of tea, for sure. But it is something we need to know if our people are going to do that. And I'm glad someone asked that question about the W-2, because I meant to mention that every church should be mentioning a W-2. Let's see. We did it in Louisiana years ago, but much has changed, sure. And it'll change before 2020 taxes are done.
Yeah, it will. Before
we do this again next year. All right, any other questions? We have recorded tonight's session. I think we missed the first 5 minutes, so we missed your introduction, Sherri, but I do have it recorded, and we'll post that on our website once everything's processed. Give us about a week on that. It'll be available. Again, if you would like a copy of the ECFA from me, just email me at duke.stone@magnoliacogop.com, and that's in the chat bar over there if you want to find that. But again, if you'll go to the ECFA, just Google ECFA, go to their website, and they have some resource pages, and you'll see the 2020 ministers' taxes made easy and church reporting made easy. It's free. They just want your email address, and you can get that from them and download it as well. They will ask you your church size. So if you're not a pastor, it's a little harder to get that. Treasurers, you might have to get that from your pastor. Any other questions? Well, Sherri's planning on joining us next month, Lord willing, and we're going to be talking about the church's retirement program, the 403B program. If you're a bivocational or you're not a pastor, but you work somewhere else, you're probably familiar with 401ks. The church's 403B program is very similar to a 401k. It does provide some great tax benefits for our pastors, not only now, but in the future with housing and things like that. So I want to encourage you to join us for that meeting. We'll get the information out as we have, and she'll be sharing more about that and the program involved there. This is not through her company. This is through our international offices that has been made available for our pastors. And unfortunately, some areas, we haven't done a good job of letting our churches know about that. And we're working on that from the regional office. One of the things our finance and our stewardship and administrative committee is working on is how can we help support that and encourage our pastors, especially our younger pastors, to get involved in that. So we'll be talking more about that in February, and we'll get those dates out to you. But again, thank you so much. If you want to tell Sherri thank you in the chat, just make sure you change it from panelists to all attendees, all panelists and attendees. There've been several of those go by, Sherri, and we thank you for your time. It's an hour later there, so I know it's way past your bedtime.
Not quite.
But we appreciate what you and Jeff do in ministry and the lives you guys impact. And looking forward to, they were actually with us down in Baton Rouge back in November. And we're looking forward to having them back in the Magnolia region to be a blessing to our people again. They are very sharp, wise people. I see a bunch of thank yous going through. Don't see any other. I see Crystal on there. Crystal's actually a CPA down in Louisiana. And, so thank you for joining us and being with us. May the Lord bless each of you. I'm going to say goodbye to you tonight. Sherri, you have any last words you want to say?
It's great being with you guys tonight.
Well, thank you again. And I'll be in touch with you in just a few moments after we end the meeting, Sherri. I'll give you a call. All right. God bless each of you. We're praying for you. Looking forward to seeing you if you're in the Magnolia region. I know we had several from out of state that joined us, but thank you for joining us. If you're out of state, Magnolia folks, look forward to seeing you in district conventions at your local church. Lord bless you. We love you guys, and we're praying for you every day. God bless you.